What's going on, guys? It is the Zoomer Value Investor here today to talk about all my due diligence. Essentially, I've covered up to this point on the company Cleanspark, ticker CLSK. Now, I also really wanted to take this time at the end of the video to address the FTX situation scandal with Sam Bankman. And yeah, I think this will be a great video. Just if you're at all interested in like Cleanspark or cryptocurrency or anything of that nature, sit back, relax, and let's get right into it. Now, I don't know if you guys saw the short that I released maybe a couple weeks ago, but I got really heavy into Cleanspark a while back, been averaging into it, been building out my position here. Now, the reason why I've been doing this is, I look at this historical valuation of this company, and I've been looking to build up kind of my crypto exposure in general, but I mean, for this miner, for this company, this is getting a point where it's way too cheap. You're talking about a price over tangible book value per share of 0.23. I mean, the market is just so sentimentally depressed on this company and is just not giving any kind of valuation happiness towards this company at all. It is all just valuation depression for this company at this time. Now, a lot of this does have to do because of the bearishness towards crypto recently. I think with a lot of the interest rate rise drama, that's created a lot of bearishness in crypto. I think a lot of that euphoria has gone out of crypto. For us in value investors, that's great. We'd love to see euphoria start leaving stocks to create buying opportunities for ourselves. But this is what I love about it, is it's just like, this company Cleanspark, I was discussing about how they're just an ever improving company. In the short, I discussed how in September they mined 448 Bitcoin, whereas in this last month of October, they were discussing about how they mined well over 500. So it's an ever improving company, it's making more and more money, and the market is just ignoring all of the underlying things that this company is doing right. And it's gotten to a point where it's so absurd where it's just, I have to start building out a position. So yeah, as you can see here, historically, this company's been at much higher valuations before. I think most notably, if you start looking at like their New Year's Eve of 2020 valuation here, you can see just all the loftiness. The same way that euphoria will return to crypto, a lot of euphoria will come back into these miners. But personally, as a value investor, I like to really get greedy about these stocks while there's a lot of bearishness in the air, while these stocks are being sent lower. However, I only get greedy about certain companies and certain situations where I can tangibly research and make a thesis of to why that company, that underlying asset to me is actually ever improving despite whatever kind of price change fluctuation has happened. And I will elaborate very clearly and very eloquently, I do so hope, in this presentation of why I believe that is the situation here with Cleanspark. Because for all the research I can gather, this company is just getting ever and ever better. It's doing a lot of things right with their balance sheet, where their projections are going in the future, with their strategic acquisitions, and they are really making great money. As a matter of fact, if you look at the bottom of that page there, the last 12 months book value per share is over 9.10. So technically, if you want to go off the book value per share metric, this should be like a $9 stock. But I could buy Cleanspark for like $2 a share on the market today. So I love the valuation of Cleanspark here today. I love the bearishness, I love all of that because it's just created a very unique buying opportunity on what I think is a very unique asset, a company I certainly would like to own for the long term, just as, a long exposure to crypto. So I truly do believe that Cleanspark is the best business it's ever been today, despite whatever price fluctuation in the stock price has happened. The only thing really changing about the thesis behind Cleanspark is the valuation of Bitcoin itself. Now, obviously, if you're like a miner, let's say you're a gold miner, and let's say it's a very greedy market for gold. So you're selling your gold bar at maybe like 3 times worth what your historic 10-year trend line average was. Let's say like 8 to 9 months go by, and then all of a sudden you're selling your gold bars for like 0.7 of what your like 10-year trend line average was. You see how drastic that was? You were in a 3 times euphoric market, and now you're in the like less than what your average trend line market is now. That's going to obviously impact that gold miner's margins. That's the same situation kind of for Cleanspark. It's the underlying asset that they are mining is taking a hit. So obviously it's going to just change the environment, their operational environment for the company. But what I think is so great is that Cleanspark, they're graded with such great management and a great team that's really just been great about keeping the company very low debt, making great acquisitions, and just being very strategic, knowing that, hey, we are going to go into difficult climates and whatnot, but we've planned for these climates, and especially by selling, our assets, our Bitcoin assets and things of that nature at much higher valuations than, what they are today. So yeah, you're talking about a company, they've actually tripled their amount of miners or mining capacity from their peak in early 2021 to right now. Now keep that in mind, they tripled their mining capacity, but the stock is 90% cheaper. They mined 448 Bitcoin in September of this year, and then turn over to October of this year, 532 Bitcoin. That's about a 19% increase in a month. This company is rapidly expanding. That's really illustrated by the revenues and the total change percent in the year-over-year revenues on the figure over at the left. Towards the end of 2019, they almost had a 700% year-over-year revenue growth. And then most recently, towards the end of the year in 2021, that was almost a 400% year-over-year revenue growth. Exahash, often abbreviated EXH, that's a metric by which you measure mining speed. Their 2023 goal is to get that up to 5 to 5.7 exahash on their machines. I'll tell you something about 5 exahash. Not a lot of competing mining companies are at that point yet. So one of the huge upsides of any kind of stock that has great management, well-ran financials, and that keeps cash, and it's just a very good diverse pool of assets for difficult times, recessionary-esque environmental times, is that when you have these clean balance sheets and cash, you can do things like make deep value acquisitions. I think one of the greatest examples is we've seen Warren Buffett. A large parts of 2020 and 2021, he really wasn't buying stocks, especially compared to how much we know Warren Buffett to be a buyer of stocks. But in the last 4 or 5 months or so, he's bought so many different stocks, and there's been all these different stories of him buying stocks. It's kind of similar. Warren Buffett and Berkshire Hathaway were both very diligent about just keeping a very diversified business, keeping a large pool of cash, because they were very, very wary about the kind of economic situation we were going into in 2022. That's kind of what happened here with Cleanspark. You see them made a very deep value acquisition here. They made the purchase of 10,000 S19J Pro miners for $20 million. That's a deep value discount. Deep value. These S19J Pros, these are typically going anywhere from $2,500 to $3K per. But Cleanspark purchased all of these at a cost closer to $2,000 per. And all that was because they were there with the cash, with the assets to buy seller capitulation. You could actually look into all the different rivals of Cleanspark, adjacent publicly listed companies, and a lot of them were actually in a lot of economic distress and had to actually liquidate some of their miners. And I'd be very remiss to tell you that I didn't believe that Cleanspark bought these miners off their rivals, because I completely believe that a good amount of those 10,000s were probably bought directly off their rivals for cheaper prices off the books. But I think this is great business. If you're able to put yourself in that kind of situation where you can kind of catch your competitors at a point where they're kind of at a disadvantage, they kind of have to capitulate some assets to you, and you can kind of, not have to spend hefty amounts on those assets. I think those are where the great strategic acquisitions come in that really can kind of set yourself apart as a business, kind of start building a moat, things of that nature start to happen. What makes Cleanspark so special? So I already went over the valuation. It's just a really unique opportunity with the valuation. There's immense future potential here, especially when you consider the Bitcoin long upside, owning a company that is very, very proficient at mining the Bitcoin asset. Whether you are a Bitcoin bull or a Bitcoin skeptic, I think it's really important that regardless, if it is something that interests you, you should probably do a good amount of research into it, because I think that would really put a lot of the educational expertise behind your opinion. And that would probably be what sways you either way. If you're kind of on the fence, or you're kind of dipping your toes and maybe I'm more of a skeptic or more of a bull. But that's the thing for me is after I did a good amount of research, I just kind of got to a point where it was oh, I kind of get it now. I kind of get where all these bulls are going and things of that nature. I feel like some people look at crypto and they're oh, I'm buying it because it's going up. Can you tell me why though? And then they can't really tell you why. They're just oh, it's going up. It's oh, well. But no, actually crypto as a technology, as kind of a decentralized asset, as its own rules-based currency, I think has a lot of future potential. I love the management over at Cleanspark, CEO Zach Bradford. You're talking about, a low debt company. Their accounting CFO is Gary A.V. He is actually a CPA. So I think that really puts a lot of affirmation behind that this is going to be a great management team. They're going to do accounting very well. They're going to run the business very well. Run the books very well. Their miners over at Cleanspark use something what is actually called immersion cooling. This is very, very energy efficient. What this has to do is when they get their miners, like their SJ19 Pros or whatever, they have to strip out certain parts from the miners, and then they're going to submerge them in water. So instead of using like air cooling or, you know, fans and all that, those fans stirring up all the time, creating all that noise, using all that electrical wattage and energy, you know, the Cleanspark facility, a lot of it is just these like machines just like dumped in water, and they're just mining Bitcoin. But like that water cooling is actually so much more energy efficient as well as just effective at cooling the machine. And I mean, one of the things that just breaks down about this thesis is just the overall market is so ignorant to the actual amount of money this company is making, because the market is just so bearish on a lot of these like newer NASDAQ companies, especially like crypto, things of that nature. But one of the central points about the thesis I can point out is like, even if you evaluated Bitcoin lower than what it is today, let's say you did a 12K valuation, which is a historical resistance point on the technical analysis that goes all the way back to 2017. If they're able to mine 532 in a month like they just did in October of this year, well, they're making 6.384 million off that. And then their costs or revenues are only like 20%. So they're getting close to 5.1 million in monthly profit for a company that's valued close to $130 million today. So yeah, you know, according to its tangible book value, this should be well above a $9 stock. And you're talking about, you know, this is a company, they're really adamant about that they are very much nearly entirely carbon free. So the metric they use is 95% carbon free. All the reasons why they can do this is because of things like, you know, I mentioned the immersion cooling, but also you just have to consider like, where is Cleanspark, where are they located, and why? And you look at them, they're located they're located kind of on the outskirts of Atlanta, Georgia. And if you actually research like Atlanta's power grid and things of that nature, they really don't use like burning coal energy over there. They clean up their power grid. It runs mostly on things like natural gas and things of that nature. So I think it's just really important that we separate our idea from like Bitcoin mining, like burning coal, like bad for the environment. And then we really just give good cadence to companies like Cleanspark that are really innovating in that space and just cleaning up the carbon footprint. So here's the balance sheet of the company. I just really want to highlight a couple things very quickly. The total assets and liabilities looks very great. I think this company is very well ran by the books. I've probably said that like 10 times in this video. You know, total debt, like really marginal amounts of debt, but there is share issuance, and I'm going to talk about that share issuance here in a second. Again, this is the income statement. We're going over the three financial statements here. Second statement so far, income statement. Again, their costs of revenues are very low compared to their total revenues, which I like. I hate companies where it's like to make $1, they're spending $1. It's like, why even run a business at that point? But this is the thing. There's a lot of room for profitability here in this business. And of course, the cash flow statement, which you actually see here, you know, this company is not particularly profitable, but a lot of that reason is because they are doing things like capital expenditures, make like acquisitions, grow out the mining operation, just be a bigger, heftier business as a whole. So they are still very much in that like reinvest in the business type of mode. So yeah, Cleanspark has been doing some share diluting. The thing is with this though is like I've looked all around and I can't really find a competitor to Cleanspark that is like not share diluting. And this happened quite a while ago. I hate share dilution, so this is just like why I have to address it, as well as, you know, I just want to be like very honest with my audience about like when I do see a flaw in any kind of company that I am investing in. I'm not going to just entirely gas up the company. You know, I'm going to just be very honest about like, hey guys, I saw this is kind of like a red flag. You should know about this. Something I really did notice is that a lot of the other companies are starting to really dilute and sell stock and stuff after the STX, like very recently. Cleanspark doesn't seem particularly like caught up in that, which is very good. But you know, again, like going from like 45 million outgoing shares to 64.8 million over the last couple of years, I mean, that's just like very significant share dilution. So something to kind of keep an eye out for. The thing is though, man, it's really like hard to get too mad at Cleanspark over this because like execution wise, as a company, they've been doing great. It's the same thing with like, you know, they're giving like their management bonuses and things of that nature. It's like, well, man, it's like you're just mining so many Bitcoin, you know, you've made this amazing acquisition with your SJ19 Pro miners. Like at some point, it's just like, I can't take certain things away from you because you're doing above and beyond what you said you were going to do anyway. So yeah, I mean, stock dilution is cruel, but it could be productive in the long run. I mean, you know, they've aggressively expanded their operation, they've paid back debt. It's just something to think about, for sure. Now we finally get into the FTX Fallout portion of the video. So what happened with FTX and Alameda? So Alameda was like the quant trading firm that Sam Bankman-Fried, or SBF, one of the large figureheads of crypto, was running at one point. And FTX was like a very well advertised crypto firm. And they actually bought out a lot of other crypto firms that got like distressed and whatnot. Like I remember like BlockFi was one of them. They bought out a couple other ones that at one point got distressed. So FTX kind of like owned a large pool of the crypto brokerage industry. Now FTX has like a FTX stable coin, like FTT. And they kind of like advertise like, oh, you know, you can get like a better interest rate. Just hold like FTT in our FTX account or whatever. And that was kind of like how it was like valuated kind of in a way. Like that's why anyone would go out and get it, be like, oh, whatever, you know, I can just own this like FTT coin. It'll be chill, whatever. Like a lot of people like to have, you know, get those interest rates in their account with like the crypto. And, you know, FTX was like being advertised during the Super Bowl, things of that nature. Like you see like Larry David and things of that nature were like working with FTX. I believe Steph Curry is another one, maybe even possibly Tom Brady. It's like all these celebs got involved, like, hey guys, this FTX thing, we're advertising it, it's so great. And I remember the Larry David commercial in particular, they were like, yeah, it's a safe and easy way to get into crypto, and he was like, I don't think so. Well, essentially what has come to limelight here now is that FTX was actually leveraging some customer funds that were supposed to be kind of be held like, you know, in crypto holdings. They're sending those over to Alameda to quant trade. So we all know that like banks reinvest customers' money when customers leave money with banks, but what they were doing, leveraging funds over to a crypto quant research trading firm, I think that was a little bit of a step too far. Yeah, so I think just kind of like waiting to see what happens in this FTX situation a little bit. I think Sam Bankman-Fried is going to talk at a conference maybe on the 30th. I think like some other major financial figureheads will be there as well. And I think that's really interesting that he confirmed on Twitter that he was going to be at this conference still, despite the fact that he's going to have a lot of criminal charges coming his way here soon. And I believe in 2008 financial crisis, a lot of the figureheads of these big banks that were corrupt, you know, running the corrupt operation with like the junk bonds, things of that nature that you see in the film that eloquently showcased it, The Big Short, you know, Steve Carell, Ryan Gosling, you know, big AAA film. You know, the figureheads of those big banks in the 2008 financial crisis, they were behind bars like within like a couple of days. Like, so yeah, I think that's kind of interesting a little bit that, you know, Sam Bankman-Fried is just kind of like going to be at this conference and he's just kind of like living life still. But yeah, I mean, over the course of 3 days, over $155 billion was wiped from the crypto markets, just like wiped. And so, I mean, this really does beg the question, like, will crypto survive in general? Like, because we're kind of still figuring out like how bad is this thing really, and this is why I'm very adamant that I'm building out my position in Cleanspark. I'm not lump summing into this. I can't reiterate how risky this asset is. I try to really just like illustrate that anytime I talk about certain like smaller market cap companies on this channel that I'm investing into, like this one comes to mind, or like Accelerator Biologics. It's just like, you know, as much as I love to do videos talking about something like Walgreens or Micron or like big tech companies like Google, Amazon, Facebook, / Meta, it's just like I can't reiterate how much different it is and how much more of a higher risk, higher reward situation you're taking under your belt. And if you want to delve into a company like Cleanspark or like Accelerator Biologics, compared to like those bigger cap companies I was talking about, like Walgreens or Google or whatever. But like I said, you know, with higher risk comes higher reward, and I as a young man, you know, understand this, and I'm willing to take on some of these risks. I understand that finance is a very independent thing, and I think you should really do a lot of your own personal research as well as talk to a lot of people who are qualified, certified professionals. But my answer is honestly, I do think crypto will come out of this a different way. I think there's been, in crypto, you can do this, you can Google this thing called Black Swan events. And basically what Black Swan means is there should have been like 30 plus times where crypto was supposed to end anyway. And it hasn't. Now, why I think crypto hasn't ended despite like all these different Black Swan events over the years, whether it's like certain countries cracking down on it, like China cracked down on crypto. It's basically like not used in China anymore, but crypto survived that. And then, you know, more recently you have like FTX now, and it's like now I do think crypto will survive this, and it'll take some time to get out of it. But the reason why I think crypto will survive is because all the research I've done on crypto, like I kind of view it differently. I view it more as like a technology, like a stable, secure asset that's on the blockchain and is very well coded and programmed to operate on this blockchain with the other 21 million or so, Bitcoins that are on there. And because of that blockchain, that's what's kept from fraudulent transactions on the actual like blockchain receipts themselves from ever happening. Like a lot of these fraudulent things that happen, such as FTX and whatnot, that's not the actual cold storage blockchain, public blockchain domain of Bitcoin. That's not where these transactions are happening. These clients are giving their money to these third parties, such as FTX, and then FTX messes up or F's up, and then this is why it's like, oh my gosh, crypto's fraudulent and it's a scam, and you get all this FUD in the air. But the thing is, like, these people aren't properly researching how do you actually own crypto, things of that nature. And these people probably don't understand that Bitcoin has yet to have like a fraudulent transaction on the blockchain itself. So why am I buying Cleanspark over crypto itself? Well, Cleanspark is kind of like a leveraged play on crypto. So for example, if I believe that crypto might go back to $50,000 by like 2025 or whatever, I invest in crypto today around, I don't know, like, let's just say like $20,000, so it's simple. Well, I could expect to make like 150% of my money over, until 2025. Because, I'm gonna get the cumulative doubling from 20,000 to 40,000, and then I'm gonna get like, up to 50,000. So that's about 150% of my money. With Cleanspark, because this company is being priced for like complete failure, but also in that same light, because I can't really point to like any significant debt they have, I can't really point to any significant bankruptcy risks. I do kind of feel like it is like not the worst place to put some capital. There's definitely a lot more companies that have a lot more debt than Cleanspark and things of that nature. But it's just like, I think that the company's already been priced for like some type of obtuse failure. And I don't believe that failure would come because the company's been very diligent about their resources, their balance sheet, and mining crypto. And I think, Cleanspark will get that path one day back to its tangible book value price per share of $9. But also, like, as the crypto price rises, a lot of the upside of Cleanspark really start to show. So let's say if we have a $50,000 crypto coin, I might think that Cleanspark will be actually above $9. I might think that Cleanspark might cumulatively double, and we'll get like 150% from that $9 point. So I think something to me that's more realistic is like you buy Cleanspark as like a $2 stock, and actually you're able to sell it for closer to $25, and then just hold some of that for like the long term as well. So I could have bought Bitcoin, maybe if I think it's going to $50,000 a coin by 2025, I make 150% of my money. Whereas in Cleanspark, I think there's a good chance that I'm buying this asset for like $2 today. I'm selling it for like $25 or more into the future, like maybe 2025 or later. Who knows as far as time's concerned. But I mean, that's just more of an upside. Buying an asset for $2, selling it for $25, that's almost like 1,000% gain. Whereas I'm making 150% of my money with buying an actual crypto coin asset itself, because I'm buying it at like a cost close to $20,000 per coin, selling it at a cost close to $50,000. With Cleanspark, it's much more higher risk, higher reward compared to actually buying the Bitcoin asset itself. And if I had to compare it, I think it's a lot like TQQ and QQQ. So as you may know, TQQQ is the triple leveraged pro shares version of the Invesco QQQ NASDAQ 100 index. So this is one of the most popular technology-based stock indexes. Now the thing is, if we go into, let's say, like a lost decade, and I believe this is really what the threat is for Cleanspark as well, like something like a 10-year period where Bitcoin is like, under like $12,000 a coin or something of that nature. If you own QQQ, for example, and you go into a lost decade, well, it's gonna really suck, but at worst, your stock's just gonna go sideways. Whereas with TQQQ, because of this thing called volatility decay, TQQQ won't operate well in those sideways markets that go on for long sustained periods of time. You're going to get volatility decay, and the underlying value of your asset will decrease because of the leverage. That's the risk with Cleanspark, I truly do believe, is that if you do go into that really long crypto winter, that true long time of a bear market, that's going to really eat at Cleanspark's margins, their ability to expand, their ability to make profit, if they can only mine a Bitcoin $12,000 or less for long periods of time. If that upside of Bitcoin or crypto never really pops off, never really like does anything for Cleanspark, that can be really risky, certainly. There is a little bit of a privilege in holding like the Bitcoin on cold storage itself, because it doesn't really matter. Like if crypto stayed at $12,000 or less for like 10 periods of time, and the next bull run maybe doesn't start until 2032, 2033, it doesn't really matter, because all your Bitcoin was doing was it was just chilling there on the cold storage. It wasn't like trying to run an operation. It wasn't trying to do like all this exogenous kind of risk of like running a business that Cleanspark's doing. But I do love the conservative management of Cleanspark. I love how they've just cashed up, they ran their assets well, they acknowledge the possibility that crypto does go into the bear market, which it certainly did, and they planned accordingly and they executed accordingly. So in conclusion, after years of research, I cannot refute blockchain technology. If I could refute it, I would not even be making this video. I would not be talking about the stock. I would not be interested in the stock at all. I would be doing my research elsewhere. I would be putting my capital elsewhere. This is a unique opportunity and a unique and uniquely priced asset. As I pointed out, the valuation slide, I talk about the actual company itself. And I think there's a unique risk reward upside here. One other quick thing I want to mention about Cleanspark is they actually started as like a power management company, and they've segued into cryptocurrency mining. But they've used their expertise as an energy company to, segue very eloquently into it. So Bitcoin, I think of it kind of like a rules-based currency. I think it solves a lot of those problems that the central banks kind of like fiat currency solves. So I just sometimes think about things like fiat currency, inflation, and then you got things like foreign exchange rates on top of that. And sometimes it just gets so overwhelming to me, where it's like, is this really like the best financial system that the world could come up with? And then you stack that on top of the fact that so many different world central banks and whatnot are in just hemorrhaging debt, including the United States of America. And in 2022, we've actually seen a period here of quantitative tightening. Now, a lot of that was in response to the inflations happening worldwide, because of, coming out of the pandemic and all the economic situations and uncertainties with that, and a lot of the quantitative easing that happened in the pandemic. So, again, quantitative easing, lowering of federal and central bank interest rates, quantitative tightening, increasing of the federal and central bank interest rates. And yeah, with things like inflation and whatnot, it's just almost like just wanting to escape the rat race and just have a more tangible, like rules-based currency. And I think that's what a lot of the attraction to Bitcoin comes from like the Bitcoin bulls and whatnot. And I think one of the frustrating things here in 2022 is we've actually seen most central banks pivot, and they're going back to quantitative easing. One of the only countries that has not done this, and is actually currently being begged by the United Nations to do so, is the Federal Bank of the United States of America. I think with all of these neighbors pivoting, as well as the UN begging them to pivot, it's only a matter of time before the US, one of the biggest financial entities in the world, they're gonna pivot their Federal Reserve to quantitative easing again. And so next thing you know, there's just like the free money printers back on, we're still gonna have to think about inflation for the next X amount of years and stuff. And it just sometimes gets to a point where it's just like a rat race, So it's like the balance sheet, the inflation of all these national currencies, and by balance sheet, I mean the hemorrhaging debt. At what point is it all just completely corrupted? And so, ladies and gentlemen, I'd be remiss to tell you that's just that statement alone is a good chunk of why I have this interest in this company. And it's just like, how corrupt and mismanaged is our actual world currencies? And when I delved into it and I researched it, it was just a lot to take in. Yeah, I don't really know what other notes to end this video on, but I really do appreciate your time today. Thank you so much for tuning in to my video. I am the Zoomer Value Investor. I really appreciate your time here today. Go ahead and leave a like, subscribe if you enjoyed. I really do appreciate it. Take care. Peace.